Hey, ladies and gentlemen, boys and girls, folks and folkaroons, how you doing? This is Greg McLeod from Elite Traders University. I want to welcome you to this edition of Bulls versus Bears, the weekly forex forecast. My name is Greg McLeod. Dr. Greg McLeod's here on the spot right now. I know I've been away for a while, missed all you guys, but we're going to look at our forex forecast and give you the edge you need in order to forecast what's going on in the market. Okay. And so let me go ahead and get a couple things going. Let me get my risk disclosure and some other things here. And we'll get going right away. All right. Okay. So let's do this. Let's go ahead. Bulls versus Bears, the weekly forex forecast. And we're going to get started right now. And I'm going to put the risk disclosure on your screen to make sure you understand all there is associated with foreign exchange trading. And this is brought to you by the Elite Traders University. Go to www.elitetradersuniversity.com and get that up there too. Awesome. Okay. So let me go ahead and share my main screen with you. And let's go ahead and look at what's going on in the market. And let's do this. Bulls versus Bears. Okay. Again, it's brought to you by the Elite Traders University and my market heat map. My market heat map. See the markets trade with confidence, and it's one of my top secret tools for finding trading opportunities in the market. And let's go ahead and log in. Right. Log in and. So this is my trade scanner. It's what I use to identify trades. And, it has different heat maps for equities, for crypto. Right now, they're all gray because the markets are closed right now. So they're normally these will flash different colors. Red is in a downtrend, green's in an uptrend, and gray, stay away. Right now, it's gray, so we're staying away, right? But it also has a series of tools. Not just these heat maps allow me to, instead of looking at a whole bunch of charts, I can look at just one layer and see where everything is. Okay. Now, tools, it has a series of tools that are helpful, including charts, quotes. But we're going to look at one tool in particular, which I like using, and that's the economic calendar. And the economic calendar, I like looking at the high impact items, so I change it to high impact. High impact. There we go. High. All right. And that tells me like what's going on in the market. That's very, very important. We can go for next week. And the most important one we're going to have is on Tuesday, September 6, 2022, we're going to have the Reserve Bank of Australia. That's their central bank. They're going to have a rate decision. And that rate decision will have a very big impact on the Australian dollar pairs, like Aussie dollar, Aussie yen, Aussie CAD, and usually, interest rate decisions from central banks are the most. They have the most weight or the most power as far as an announcement comes. Okay, so they actually move the currency hundreds of pips on a single decision. So this is going to be where the party is. So maybe we'll start seeing movement on Sunday and Monday as big players and institutions start moving money into the Australian dollar. So you may say, I want to trade the Canadian dollar. Well, the Canadian dollar news is going to come up on Wednesday. Or you might say, I want to trade the British pound or the euro. Well, you really want to trade currencies where there's activity, where there's interest. And if you're trading something that doesn't have a lot of interest in it, it probably is not going to move. And maybe you've been to pairs or things in which, oh wow, I'm going to trade this, but it doesn't move. But then you look across at your neighbor, your friend, or someone else who's trading, and they're making a bunch of money because they know where the party is, right? So the economic calendar is a great way. And I'm not saying trade the day of the announcement, but leading up to that and then a little bit afterwards, that's going to have a lot of volatility surrounding that currency. So the economic calendar is what we use to find that. So I'm not really concerned that what the interest rate they're going to cut or they're going to raise or anything like that, because honestly, at Elite Traders University in our mentorship, we use the predictive function, the predictive indicators, to actually forecast the market and get in 4 or 5 bars ahead of time, like my guys did on the euro when they had the non-farm payroll this past Friday. A number of our students did very, very, very well, including myself. Why? It didn't really matter what they said because we knew what they were going to do ahead of time. And that's inside information is not illegal in the currency market. If you want to learn more, you can go ahead and we have a you can actually find out more from our scrolling. The scrolling offer, right? There we go. Yeah, the scrolling offer that's going on up there. You can actually sign up for our free masterclass and learn more about what we do in 4 pillars to 6 figures. Okay, so go on to Wednesday, September 7th. September already. I can't believe how fast time's going by. But we're gonna have another a central bank announcement, and this time it's gonna be from the Bank of Canada, or the BOC, and that announcement is gonna come out. Previous interest rate was 2.50%, and there's no forecast given that they might raise or what, but the Canadian dollar will be in play, and that's going to be at 10 a.m. Eastern time. These times are in Eastern time. Also, going back to the Australian dollar, that's going to be about 12:30 Eastern time, right? So on that Tuesday, so a little after midnight. Now, also we're going to look at the gross domestic product Q on Q, or quarter on quarter, out of Japan, and so we might see some movement in the Japanese yen, pound yen. Looking for the yen to strengthen moving forward. The yen and the U.S. dollar kind of move in the same direction. So 0.5% for GDP. If we see a higher number in GDP, we could see the yen actually strengthen. Friday, more Canadian data. We have average hourly wages year on year. It's not yoy. No, it's not yoy. It's year on year. So they're comparing this year's to last year's at this time. And the average hourly wages, 5.44. Again, no forecast numbers given. But if it's high, the CAD could rally. However, if it disappoints, if wages are falling and the economy is not doing so well, or we could see maybe the Canadian dollar actually sink. Canada relies heavily on oil, so also look at the price of oil. You want to, when you drive by your gas pump, if you're in the U.S. and you see, oh wow, gasoline prices are falling, well, that's probably going to negatively affect the Canadian dollar in the short term. So that's one gauge you can look at as you go up to the pump and pop some petrol in your car. You can look at the gas pump prices and kind of determine where the Canadian dollar is going to go. Okay, so it's kind of a light week for high impact items. If we add the medium impact items, it might be a little bit more. There's some other stuff there, some GDP, some Chinese, lots of Chinese data, which is also centered around Australia as well, because Australia is one of China's largest trading partners. So any Chinese news could also affect the Australian dollar, right? And we have some minor U.S. news, continuing jobs claims, initial jobless claims as well. The dollar is in a very strong move, and we're going to look at the technicals now. Again, there's not a lot of there's the Fed's beige book coming out too. We might see the euro. I like trading the euro versus any type of U.S. data. Okay, so if we do have good U.S. data, we could see the euro actually sink. So let's take a look at the anti-dollar, take a look at the dollar index first. Okay, we're going to take a look at the dollar index. We're going to go to the Bulls versus Bears dollar index, and we're going to delete all this stuff here. Okay, get some nice clean charts, and we're going to start with DXY. And the DXY is pretty interesting. I'm going to zoom out. We're going to take the dust off and go all the way back to monthly charts. I know you guys don't look at monthly charts. So, Greg, we don't trade off a monthly chart. Yeah. But this is what I wanted to show you. I actually drew some, where we fell. We had, from 1985, we had a high of 164.62. Okay, now this is after Paul Volcker was the Fed chairman at the time, and so what he did was he decided to start raising interest rates just raising them continuously instead of letting up. Now, there's a guy, I think it's Arthur Berman, but I'm not sure, back in the 70s. What happened was that he didn't raise rates, and what happened was we went into like, a hyperinflation and a recession. So Volcker started aggressively forcing up interest rates, and that would, to stop inflation. And then we had, so instead of, and so Jerome Powell is a student, or he's, he looks up to Volcker. Volcker has passed away, but Paul Volcker's method for controlling inflation was to not to let the foot off the accelerator, but keep on raising rates. Now that's important because the dollar is following the direction of interest rates. And I got a lot of guys are saying, well, the dollar is weak, and the dollar is this, and the dollar is that, and a bunch of crypto people, and the gold bulls, and everybody's writing about the demise of the U.S. dollar. And this, my friends and folkaroons and fans out there, shows you that the dollar is not going to go anywhere. The dollar has a long way to go to the upside, and we're currently at 109, so we broke above the previous highs of 103, right? And we were unable to make new lows when we try to retest that 89.75 area back in July. We were at 88 back in July 2020, and prices just surged. Triple tops or unicorns, you never have a triple top. So we have boom, stopped, then boom, broke into this area. And now we have a big gap of space between 109 and 121. And this just indicates that it seems like the Fed is going to continue to raise rates, and the dollar is going to continue to run up. And this is the next level of resistance. And we had some large gaps. I think we had the Plaza Accords where people were worried about the dollar's values, saying that we had twin deficits, and we still have deficits, but we're raising rates too. And we're, out of all the economies of the world, we are the cleanest shirt in a dirty basket. So you ever try that? Like, oh, I need something. You start sniffing the shirts, like, oh, that one's this one's okay, right? Little Febreze, they'll be fine, right? So that's how the U.S. economy is, even with trillions of dollars in deficit spending like drunken sailors. The dollar is still the cleanest shirt in the batch, right? And so this gap that we have down in the U.S. dollar, these stacking candles were a gap where prices just gapped down, and so usually with prices, when they gap down like that, they say, well, yeah, those are big candles. Like, yeah, but see, the currency markets are illiquid, and they're not indicative. They're just indicative. They're not, they're estimates of where price was. So they just kind of like color in with a crayon. So what happens on this side, usually of the real symmetry, we'll have prices move back up. Price to move back up in the dollar in a similar fashion back to the old high. Okay. Plus, from the technician's point of view, you have like an inverted head and shoulders, right? And now we're just creating this symmetry, this whatever was forming on this side. So this, now you say, why are we focusing so much on the U.S. dollar, especially this far out in time frame? Well, it means that the other currencies, it's always other currencies versus the U.S. dollar. And it's like it's like a little gunfight where we have it's the Japanese yen, Swiss franc, and the dollar index, or the U.S. dollar, versus the pound, Aussie, New Zealand dollar, Canadian dollar, Swiss franc. No, not Swiss franc. Swiss franc is on the dollar side. But there's risk on currencies and risk off currencies. And so what I'm showing you here is we have the dollar index. We'll probably see the JX. The JXY, the yen index is the currency index. It's bottoming out, maybe, and then let's look at the AXY. Okay, so the AXY is in a downtrend too. So this takes the Aussie currency index. Is all the currencies versus the a basket like AUD JPY and AUD CAD, right? So that basket looks like it's going to roll over too, breaking through some support, and so we can see maybe a retest of the 57.18 area. But let's look at the euro. That's the anti-dollar, where we could get. Now we just reached above parity, and then we dropped right below, right? And it's in a drop mode too. So this is our monthly, and we can see that we have a very bearish pattern. We basically broke a rising channel. Oh, come on! We broke this rising channel, and we broke it, came back, retested it, reached back above it, and then tested it, and then now we are the euro is falling in free fall. Okay, so we have this. So now we are headed toward. We're at just barely hanging on to parity. We have a low back here at 55.88, which, the euro actually came into birth in 1999, but it was the European currency unit beforehand. And but if the dollar, and you gotta understand that this is the anti-dollar, that this cannot rise if the dollar is rising. Just no way, because why? It's EUR versus USD. So if USD is going up, there is no way that the euro can rise. And we've got maybe some minor support back from 2002 in the 96.23 area, right? And then we can see some little bit of support here. We don't get real support down to the 82 area, and we haven't hit that back since 2000. I remember watching the currency market there, and we can see that we're making lower highs and lower lows. If you're able to structure people, it may come up for air for a little bit, but it's just let's look at a weekly. Let's zoom in a little bit, and it tried to rally, and then boom, we're back below parity. Parity means that $1 equals 1 euro. $1 to 1 euro, that's parity. And now it's the other way around. Now it's a little bit less. It's like 99 cents, a little under 99 cents for 1 euro, to $1 to 1 euro, or 1 euro to $1, right? And so we've got 95.88. That's 400 pips away. We could continue to move down. So bulls versus bears. I am bearish on the euro. The euro to zero is a battle cry, right? And we can see some lots of old support down there. We're in free fall. We're just filling in those green candles here. We're filling them in on this side, and see as we move down the dotted line, this is where we have support, 96.12. Okay, so definitely looking for a complete. It tried desperately to try to maybe a double top 122, try to rally in 2021. This could not. Okay, let's look at the next one. We'll look at GBP USD. Let's go across the pond. Go across the. Go across the channel, the English channel there, and we can see. Look at this drop city, just drop. We are testing some support. We are testing 114. We haven't been down here since the old. This is the pandemic low. We're heading to the pandemic lows, and looks like that touchdown there. We are approaching very closely. So what's after that? Let's go to a monthly chart. We actually have another bit of support back here from 1985. Well, I was in high school when that hit that area, right? And so we break here 115. 105.24. That's like 1,000 pips. And there's no technical support in this area. We call this snare gap, right? So once this thing breaks, and we're going to have a continued drop, right? We got to go back even more, 72. Well, I mean, Bretton Woods, we were back, look how far the might have fallen, right? And that could be a double bottom. We can get down there and form a double bottom. But wow, we covered a lot of territory. I was at the brokerage during the 2008. This is the global financial crisis when things collapsed, right? And now we rallied a little bit, and now we're all the way back below that area. Okay. So pretty interesting stuff. If you're not into currency trading now, it's going to be really interesting in the financial markets in the next several days or several weeks. Okay. Let's move on to USD CAD. That's where we have some news coming out. And again, this is where we're looking at some dollar strength. And we had some... Now we can see that we're having this choppy... This is a monthly... We've been chopping around because, the dollar was getting strong, but oil was also strong too. So it was like kind of like a arm wrestling battle between the dollar and the CAD, right? And so now we're just, we're pulling up, pulling out, and we may continue to, after a double top, and a three-wave correction against the trend, we may be starting a new one. We could probably see new highs in dollar CAD. Maybe a move toward the 146 area. We first stop, though. Let's not get too far ahead of ourselves, Greg. We've got some, the 134.14 area, and we're at like 131, so about 300 pips away. Let's drop down the weekly chart, and you can see that we are just working our way up, just slowly just grinding out any bears that are trying. Every time the bears try to pull it down, then we get some nice string of bullish candles, right? So the dollar CAD, bulls versus bears, we are bullish. Okay. Let's go ahead and continue with dollar Swiss. Dollar Swiss is like the mirror image of the euro, and you can see nice big bullish move from a pullback, probably some type of Fibonacci support on the weekly. Pull back down to the 50% retracement at 0.9413, and we are heading up, heading higher and higher. We can go, and we can see that we have a bunch of resistance here in the 100 area, the parity area there, and we could probably break that and continue higher. So at least 10069, I'm looking at that as a target. Bulls versus bears, I am bullish again because the dollar, it's really easy, buy the dollar. That's not a trade recommendation of any kind, but that's what I'm going to be doing. I'm going to be long the U.S. dollar, right? Dollars in a recession. That's what you go back to the 1930s. People who had money could buy cheap assets. As the whole idea of the Fed raising rates is to make everything less valuable and make the dollar more scarce. Okay, so we got, do I put my neon bear up there? No, I'm sorry, bullish. I'm bullish, dollar Swiss. Hello, okay. Oh, stop, okay. All right, so dollar Swiss. Let's go ahead and go to S&P 500, SPX 500. I mean, I didn't want to neglect. I have so many students from New Zealand. I wanted to just go ahead and do New Zealand dollar, and this I just gonna remove all drawings. And we're in free a variable free fall there after our correction reached a whole bunch of just ran into all this resistance, the supply zone area, right? And now after hitting that area multiple times, we have some support coming in, but it's similar. We're battling the dollar, and we got low of 54.75, about 400 pips, 700 pips away, 600 and some change down. We can break that 60 area, then we've got, there's some little bit of support, but once this stuff breaks, it looks like it's going to be another free fall here as well, and maybe much lower. We could probably go back even farther. There we go. I knew there was some more action back there, and then so we've got the big low back here looking to be retested at 49.11, and even more support back there. This probably has a lot of lots of areas to go where we're just we've found some. Now we're finding some support here, and they're trying to hold it, but the market tide should take this down over the next period, next few weeks. We should be looking for a downward move. Kiwi dollar, bulls versus bears. The bears are in charge. Roar, on that. Okay, let's go ahead and let's move on to SP 500, SPX 500. Just gonna look at an index, and we can see that this is not too good, guys, for the bulls, right? If you're a bull, and most people who trade indices are bullish, but really, remove all drawings. Okay, this is not good. All right, it's because we had a rally, the Fed-induced rally. They kept pumping money into the market, and now they're taking money away. They giveth and taketh away, right? And now we have a lower low, a lower high, a lower low, a lower high, a lower low, and then it's like, okay, let's push this up, right? What do they push it up to? They push it up to a 50% retracement, right? And also we've got a Fibonacci on this side here. We bounced off the 38, and we bounced here. So we're at a crossroads between Fibonacci's, but we're in a, it's a technical downtrend, right? Lower swing highs, lower swing lows, and so what are we looking at as the dollar continues to strengthen? And remember, we're trading indices. Let's think about SPX 500 / USD. We're trading dollars for the index. If the dollar is rising, this is not going to be able to rise. We'll get these bull market or these bear market rallies, or these rallies in the bear market, and they'll be sharp and fast. And if you're short, you'll get crushed. Like right here, we'll probably have some type of a rally, and then a drop, so a pop and a drop. So we'll be moving our way down some more. There's support down at 36.32, and I think we go down below that, and maybe we'll stair step up some rallies. Maybe we rally here. There's lots of support, 4 candles there, a little bit of support, maybe rally up to the trend line, and then from that rally up to, say that's 41.71. Then we come back down 36.52, right? So we'll just keep this kind of a rally boom, until we probably find some support down near 32.16. There is probably a lot of support there coming from a Fibonacci area. There is the 618, so maybe October, end of September, October, we get down here, and then maybe we get a big rebound from here, and then another drop, and then maybe get another maybe kind of a bear market rally going into, Christmas. But then, we may come back and touch this area down here, which is, so bull versus bear. I'm not a perennial bear. I'm not bullish. I'm short-term bullish, long-term bearish, right? So that's short-term bullish. I mean, it's tradable. You'll get tradable rallies, but don't sit on this whole thing overnight, thinking that, oh yeah, this thing is gonna go to the moon, right? Because we would have to break all of this to get back on task for a. Now that's what they're betting on. They're holding that 36.48 will hold as a pullback in a uptrend, and then this is what they're looking at. They're looking at maybe we can get up to here, right? We can break this trend line, right? So there'll be people mounting an attack probably on Tuesday to try to take this up there, but I wouldn't hold it past this area, because then they'll sucker a bunch of people in, and then boom, they'll lower the boom on you guys. So short-term bullish though. However, I'm bearish long-term. Okay, especially with the U.S. dollar going up, the dollar will pull the reverse of what they did, bringing everything back and taking the punch bowl back from the party is what they're going to do. I'm going to throw Bitcoin in there as one last thing here. BTC. Now, remember, it's BTC versus USD. We're exchanging dollars for Bitcoin. Now, if the dollar is going up in value, why would I ever want to buy Bitcoin, right? You got to understand, it's a teeter-totter. If you got a really heavy guy on one side of the teeter-totter, there's no way for the other side to go up, right? Unless the other guy, gains a bunch of weight, okay? So don't think, oh yeah, they can do it because, no, it's not physically not possible, right? So you saw something here. I said we broke this, let me remove all this, remove all trend lines, okay. And then, so there's probably people looking at this and saying, okay, we got a double bottom here and a little support here in this 18,000, 19,000 area, right? But remember, it's Bitcoin versus US dollar, and the dollar is going up in value because of the interest rate. So in fact, we are sitting right on the old high of 2017. Ooh, right? Coming right back to that area. Returning back to the scene of the crime. But the way this looks, it looks like it's going to maybe even come back even lower. And so, maybe 98.37, there's some support there. Probably a little higher than that. There is a wick where we had 13,772. That's a $6,000 move to the south side, guys. There's very little in the way of support between that. Maybe 1,700, 17,000. 17,000, I mean, still that's $2,000 away, right? But this is weekly, and we're looking at, so you might see some type of little fake out rally to lure people in, but this is a trap to probably lure people into the south side. This looks like lower swing highs, lower swing lows, and if we use some type of Fibonacci projection to actually get some type of a projection of where we could go, 100% expansion is down here at 12,218. 12,218 on the. That would be like a minimum target. We could go 1.618. Now we're talking about negative numbers. Zero. I know it's not looking good. Don't write me angry letters. Craig, you're telling the Bitcoin could go to zero? Well, oil went to zero, and then oil went back up to like 100 and something, 120 something, right? Things can go to zero, right? But don't panic if you are. It might be a great buy. If you loved it at 19,000, you'll love it at, no, I'm sorry. I know there's a lot of pain. People mortgaging their homes and doing all kinds of getting credit cards and stuff to buy Bitcoin because it's the currency of the future. Now, if the Fed is raising interest rate, guys, you guys, this is like you're in a lesson in economics 101 here. That interest rates, they move the market. They make things go up and down. And I was a kid in the 70s, and I remember when we had hyperinflation and running out of gas and long lines and food out of control, and and then then they raised rates and you got 10% mortgages, that kind of stuff. That's that's 50 years ago. And if you're new to this stuff and you're like, well, man, I'm gonna buy Bitcoin because it's the currency of the future, it's like, really? Have you seen the past? So be careful out there, guys. I'm not, maybe you can, use options to hedge or something like that. I'm not making any recommendations, but I believe eventually, because this looks like NASDAQ 2000, and when the NASDAQ, we had all these internet stocks and everything looks really rosy, and things crashed in 2000, and I was there. I was in the middle of it. But it came back. It really did. It really, we had the, if you look at a NASDAQ chart or the QQQ chart, really, what was it? NQ, right? If you go back where we were, that was the collapse. We hit the rally. Whoop, whoop. We're going to be millionaires. Oh, snap. They raised interest rates. They raised interest rates. They do this all the time. You were too young to remember it. Or you weren't even born. But boom, they raised interest rates. Same thing happened, right? And it moved sideways for like a gazillion years. Around about 10 years. And then it started going back up. Got back to the old high in 2016, so some 15 years later, we got back to break even, right? 15 years. Now, if you died or retired or lost your job along this way, and your 401k was like 0K, that's why you really need another plan, guys. You need to learn how to do compound day trading. When you can get in and out of the market with great speed in the market, and you can make money at will, guys. That's what you really need to look at, and that's what I teach students to do, because I work with 50-year-old some odd traders. People who have maybe something happened to you. Your kids your kids are grown. You spent all your money helping them. And then your job is, your big high-paying job is gone out, and you just got, you thought trading was going to help you, but you've just been throwing money at the market all the time, and you haven't made any money. And the whole idea of putting money away for compounding, save $4,000 at age 25 and do that every year, and by age 65 you're a millionaire. It's like, yeah, but you're over that age. You're 55 or you're 52. What are you gonna do? Okay, you're gonna need a strategy. And that's how I help traders, teaching them my compound day trading strategy, where they can compound small gains over and over again repeatedly, and they can make $5,000, $6,000, $10,000 a day instead of $10, or you're break even and you're still learning, or you listen to some guy and you're not making any money, right? So I tell you what, go to the master class. This is what you need to do. Go to the master class. Sign up for the masterclass and watch the whole thing and take notes, okay? And then at the end, I'm going to invite you for a talk. I'll share with me the compound day trading plan, and we'll get a plan of action, because you're supposed to have 6 times your annual salary by age 50. Okay, so if the average person makes $50,000 by age 50, you should have $300,000 in your savings account, in your IRA. Okay, that's the truth, right? Because you got another 10 year earning years. You're putting money away, and the market's going up at 10% per year, which is not what happens in down years, right? No one ever thought about that, right? So you need to do something, because I don't follow the direction of the market. I just get in and out the market on little swings, little tiny moves, in and out, boom. And I turn off the computer, I'm gone. I'm not sitting through a downswing in some stock, because I'm liquid, okay? And so that's what you want to do. That's what you need to do, because doing what you're doing now hasn't worked. And many of you have been trying to trade for 5, 10, 15 years. Your kids have been born and grown up, and you're still trying to learn how to trade. Okay, so you've tried the rest, try the best, sign up for the masterclass, 4pillarsto6figures.com. Watch the entire thing, take notes and pay attention, something you probably didn't do in high school. I'm going to teach you something incredibly new, and then we're going to talk on the phone with me or one of my members of my team, and we're going to help you turn this thing around. We most certainly can, okay? My students have 90% win rates. 90% win rates. You can go to my YouTube channel and you can see their testimonies. They didn't make this stuff up, okay? So I'm for real. I've been doing this for almost 30 years. Again, my name is Dr. Greg McLeod. You can go to EliteTradersUniversity.com if you want to find out more about me. I look forward to helping you in your trading. I care about you. I love you. I wish you all the best. God bless you. Peace and pips. Cheers.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!